Anduril just set the number, $61.55 a share. And to the surprise of many shareholders, they're settling your RSUs early. Most shareholders saw that email, saw that fair market value, and filed it under good news. It is not just good news. It's a tax event. It's on your W-2 this year. And there's one checkbox coming with the deadline measured in days that decides whether you write a six-figure check to the IRS next April or not. This video is about that checkbox and the trap sitting right behind it. Hello, my name is Derek Munchow. I'm the managing partner at Augustus Wealth, but more importantly, I'm my client's wealth advisor. I value your time and attention. I do not take it for granted, and I will do my absolute best to keep and earn more of it. All right, so let's get into it. Let me explain what actually changed because the structure is the whole story. Anduril RSUs used to be double trigger. Two things had to happen before you owed a dime. The shares vest on schedule and a liquidity event, an IPO or an acquisition. Until both fired, you held a promise, not income, no tax. Single trigger kills the second condition. Now the shares are taxed when they vest and settle. On service alone, the liquidity event restriction is being waived. And the value of those shares at $61.55 all land on your W-2 as ordinary income this year. And here's the part that catches people. This isn't just about future vests. The RSUs you've already earned, the ones that have vested on the service schedule and have just been sitting there waiting on a liquidity event, those are settling right now with this trigger. Shares you've been quietly stacking for years that you thought were parked until an IPO just became a taxable event that you didn't choose and didn't time. That's why the bill can be so big and so sudden. That's the same structure SpaceX shareholders have been living with. And you know what comes next? Income that stacks every single year. So let's deal with the decision in front of you first, then the bigger picture. Before I tell you anything about what to sell, I'm going to ask you what nobody else asks. How bullish are you on Anduril? Because most advice on a concentrated position starts and ends with the rule of thumb. Any one stock over 10-15% of your net worth is sell it down and diversify. But we don't start there. Here's what we've seen across SpaceX, Anthropic, and Anduril shareholders. The ones who built real wealth were often the ones who held conviction through the uncertainty. If you're bullish, if you're willing to take the shot, taking outside risks only works when the downside is survivable. That means the tax is covered. Your near-term expenses are funded. A forced sale at the wrong moment is off the table. A bullish shareholder who can't pay April's tax bill without dumping shares isn't making a bet, they're exposed. So fund the survivability first, then let conviction size the position. And the thing that determines whether or not you can even make that bet is the tax. So let's go there. Here's the checkbox. When your RSUs settle through Morgan Stanley at ShareWorks, you elect a withholding rate, standard or higher, 22% or 37%. The default federal supplement rate is 22% on the first million, 37% above $1 million, and 22% feels painful enough, but it's not enough. A senior shareholder in California, strong base, stacking this settlement on top, your real combined rate, federal plus state plus Medicare plus NIIT, is sitting between 45 and 52%. Let me put real numbers on it on the actual calculator. 800,000 settles at $61.55. Withheld at 22%, about 176,000 federal. Actual liability all in with California, approaching 400,000. The gap you owe next April can run past $150,000. That's one tranche, $2 million across the year. The gap scales with it. Now here's the part most people miss. Electing 37% doesn't change what you owe. It changes when you fund it. So if you pull more now, smaller surprise in April. The right answer depends on your full situation. The default is a withholding rate. It's not your tax rate. Know the difference before you click and make sure you click before the window closes. So here's what happened with SpaceX. It was a very similar use case where we had a lot of shareholders that were caught off guard because when the announcement came about a possible IPO rumor, there wasn't like any serious thought about if it would happen. It was just, okay, it could definitely happen, but not sure it will. And as you started to get through the different months and as things got closer to what eventually became the IPO in June, things happened very quickly and they got put on their heels. The Anduril shareholders who come out of this ahead won't be the ones who guessed right. They'll be the ones who saw the clock before it ran out. Now, the bigger decision. When the settlement hits, you cover that withholding one of two ways. Number one, net settlement, and that's where the company holds back shares. And number two is cash out of your own pocket where you keep every share. This is where a worker decision and an investor decision split split. You pay with cash, you keep all the shares. The cost is the cash today. The upside is every share stays in your name, riding to whatever Anduril is worth later. And here's a detail worth understanding. The 6155 is the common stock value. It typically sits below what investors pay for preferred shares in a funding round. The company has been repricing higher round after round. A future 409A value could potentially move that common number up another 20, 30% or more. That's a possibility, not a promise, because valuations can rise as well as fall. But if you're bullish, surrendering at today's prices to the IRS is likely the most expensive path. Now, the trap. If you have no cash reserves and no asset base to borrow against, your only source of tax money is the stock itself. So you net settle, you sell at 61.55, not because the timing is right, because you had nothing else to pay with. You wanted to hold with conviction. The bill made you a seller anyway. That's the opposite of a deliberate bet. Your balance sheet says you're a multimillionaire in Anduril stock. Your cash flow can't produce the tax payment without selling it. The gap is the entire game. Fund the tax first, you get to choose. Don't, and the choice gets made for you. Now here's what most people don't realize. It's actually not all or nothing. You can blend it. You can net settle enough shares to cover part of the withholding and top up the rest with cash. You decide the mix. That's the move for a lot of shareholders who are bullish but don't have the full tax bill sitting in a savings account. The point is, you're not forced into surrendering every share the IRS would be taking by default. And you're not draining every dollar of liquidity that you have either. You're choosing the ratio on purpose, based on how bullish you are and how much cash you can afford to part with. That's the whole theme of this video. Every one of these decisions is a dial, not a switch. The shareholders who win set the dials deliberately. The ones who don't let the default set them. And it's not just the RSUs. Anduril gives you an ESPP and a 401k with no match. In a heavy settlement year, the order matters. Here's the part single trigger changes for good. Under the old structure, the tax was a someday problem. One big event at the IPO. Now, it's an every year problem. Shares vest on a schedule. Settle. Stack ordinary income on top of your salary. Every year, base plus the vest can push you deep into the six figures of extra income taxed at your highest rate. Do nothing, the stacking happens for you. You plan it, it's a sequence you control. Project each year's vest. Size the election to your real rate. Stage the payments. The shareholders who keep the most didn't guess the valuation. They treated every settlement as a known event and had the cash ready. And because this is a multi-year game now, we put everything we know into one place. It's called the Anduril Equity Secrets playbook. It walks through the double and single trigger tax, the withholding elections, the shares versus cash versus blend decision, the ESPP, and 401k sequencing. All of it. It's free and it lives with the full suite of Anduril tools on our Worker to Investor page. So grab it and run your numbers. And you're gonna walk into your next settlement already knowing your move. So here's what to do this week. Pull your full grant picture onto one page. If your election window is still open, choose your rate against your real number, not the default. And if it already closed, get the next settlement right. Decide shares versus cash or the mix of both before the settlement, not during it. And build the reserves now because the bill is predictable. Every calculator to run these numbers is on AugustusWealth.com, free, no login. The Anduril Equity Secrets playbook and the tool suite are all on the Worker to Investor page for Anduril shareholders. This is educational. It's not personalized tax or investment advice. Concentrated positions carry real risk, including the risk of real loss. Your situation requires its own analysis. And here is the whole point. Everything I just walked you through, the election, the shares versus cash call, the stacking, it all serves one thing. Right now, your equity makes you a worker. It's wealth on paper, real, but frozen. It shows up in a portal. It can't pay your mortgage. It can't fund your life. And one bad tax decision could take a big chunk of it before you ever touch it. An investor is different. An investor has wealth that works. It's deployed, generating income, whether any single stock is going up. Moving from equity on paper to wealth that works. You earned the equity. The hard part is done. Don't let a checkbox with a clock on it decide how much of it you keep.